Okay, so welcome everybody to this webinar. I hope you've all had a wonderful summer. Obviously, we didn't have a webinar in August, but I hope you all enjoyed yourselves. We're back with what I think is a very, very important webinar, and it's not really something I've taught in this way before, but the way that it came about, and I think it's probably interesting for you to understand the way that it did come about, is I've been teaching my 10-year-old daughter to trade the market. She got basically in last year in school, they did this sort of a trading competition, if you like, which I went in school and I helped them all with, and she really kind of got the bug for it. And she wants to take it on to the next level. So I've opened up an account for her. I've funded it with a little bit of money, not too much, just a few £1,000s, and that's the way that she's going to make additional pocket money. But obviously, whilst doing this, I wanted to take her education beyond what it was that she learnt from school last year and what I taught them in the few lessons from school, and really kind of break it down so that she can take this on and, you know, it can be something that will make her money for the rest of her life. And obviously she's a 10-year-old, so there are certain things that you can't, you know, she's very, very clever, she's intelligent, but there are certain things that you can't teach a 10-year-old, or at least they need a little bit more time to get their heads around. So one of the things that I've been teaching her over the summer is really how to figure out where the price is going, because ultimately that's the most important question, right? If you can answer the question of where the price is going, then you're going to be able to make money. And that's what this webinar is all about, because as I said, you know, I think that new traders, actually more advanced traders, they get it wrong. Once they've been in the markets for a little bit too long, they get a bit jaded, they start focusing on the perfect entries and things like that, and they just kind of miss the fact of what we're trying to establish, what we're trying to understand is where's the price going to go next? And if we understand where the price is going to go next, and we can be right, you know, more often than not, then we're going to make money. Now, before we get any further, let's make sure we go through the disclaimer, which is to say the contents of this video are opinions only and not investment advice. This video should be used purely for educational purposes only. All viewers are advised to seek their own counsel prior to investing or entering into any trade. Spread betting and any other type of financial trading carries a high level of risk to your capital, of the possibility of losing considerably more than your initial investment. The contents of this video, this webinar, may not be suitable for all investors, and an individual should ensure that they're fully aware of the risk involved. And if necessary, you should seek the advice of an not authorized or regulated to give investment advice. Now, for those of you that don't know me, a little bit of an introduction. I've been trading since 2005. In that time, I've done many, many things. Obviously, I've had the privilege to consult for a private investor fund in Europe, so I took it to the professional level, if you like. I've taught and I continue to educate thousands of traders around the world, people like yourselves. I'm a self-confessed market junkie, so I just love the markets. I love, you know, anything to do with being able to put your money down somewhere and seeing a return on your money without having to, you know, talk to people, so to speak. So it's sort of like that intellectual pursuit that I really quite enjoy. If you want to follow me, then I am available on Instagram, so you can come follow me on Instagram, check out my YouTube channel, or of course go to my Facebook page. Either one of those, you'll be able to get hold of me. Okay, so that's enough from me. Let's get into the webinar. So the first thing that we need to understand, and I'd like to start a lot of webinars with this slide here, is just really to get people into the right mindset to be able to make money from trading. And that is to say that successful trading is about looking at all of the relevant information and making an educated guess on the future direction of the market, right? None of us know exactly what's going to happen in the next 5 minutes or the next 10 minutes. All we can do is that we can look at the information that we have, and then we can make a decision on which way the market is going to go. And if we make the decision based on you know, sound methodology and, you know, sound principles, then we should be able to come out ahead of the game more often than not, and hence be able to make money. Now, ironically, in the early stages of a trader's development, they're actually much, much closer to the secret than they know. So you guys, when you first came to the markets, before you understood too much about the way the markets worked, you were closer to successful than you probably are 6 or 12 months down the line when you've got so much more information. right? And this is what we're going to go into in this webinar. But if you think about it, when you first came to the markets, you were looking to figure out which way is the price going to go, and you're going to make some money, right? You probably put on a demo, put on a couple of dollars, a couple of pounds a point in your demo, or maybe hundreds, whatever it is, and all you were trying to do is figure out where the market was going to move. And when you made a bit of money, you took profit. When you lost a bit of money, you probably let it run, actually, which is something that you shouldn't have done in the beginning. But anyway, but the point is that your approach to the markets was literally, it wasn't about this candlestick pattern or that candlestick pattern. You weren't overcomplicating things. You were literally just trying to figure out, where is the market going? Where is price going, in the next, whatever period it is that you're looking at, in the next hour, the next 4 hours, the next day, the next 5 minutes. It really doesn't matter. But what matters is that what your approach to the markets, you were just trying to figure out the way that price was going. Am I correct in this assumption for the people on this webinar? I know I'm correct for the majority of traders out there, but hopefully the people on this webinar right now can identify with that, right? So your journey, as I said, a new trader looks at the market in a very, very simplistic way. They don't understand what all of the indicators are, and they're simply trying to figure out which way the price is going next. However, and this is where that saying, little information can be a dangerous thing. Once the trader understands a little bit more about the markets, all right, and has had the quote-unquote benefit of advice from these unknown avatars on various forums, okay, so you get the keyboard wizards, keyboard warriors out there, just like sits on forums all day long, but they don't really know what they're talking about. They probably never traded, a successful day in their lives, but they're happy to give advice to everybody else based on their views, which aren't necessarily the correct views. But anyway, with the benefit of this advice, they start to understand that they need to have a system to be successful. You can't just come to the markets and sit there and say, well, I need to figure out which way price is going, and if I understand which way price is going, then I can make money. No, that's way too simplistic, and you obviously have to be wrong there. You need a system. You need a predefined set of rules to be able to identify where to get into the markets. And there's the key. When you start looking at the system, you're no longer looking, all right? The emphasis is no longer on figuring out which way the markets are going to go next, right? It's not really that. I mean, you kid yourselves and say that, of course, I'm trying to figure out which way the markets are going to go because that's how I make money. But actually, if you really think about it, you're looking for that perfect entry system. You're not as bothered about the broad way that the market is going, right? You're just interested in that perfect entry method that can kind of, give you 100% win rate, or 98% win rate and 2% loss rate, something ridiculous and unrealistic like that. You don't actually kind of try and figure out, well, which way is the market going? And with a bit of sound money management, then I should be in a position to be able to make money, right? Now, the lucky few, eventually they make it full circle, all right, and armed with the additional knowledge, okay, and so knowledge is a good thing. Don't get me wrong. I'm not saying go into this blindly. Absolutely, you need to understand more about what it is that you're trading, all right, but you don't need to come away from that initial part of trying to figure out which direction is the market going. But armed with this initial knowledge, they start to make money, right? However, the majority will give up and never return to the markets again. So in order to be successful, we need to answer just one fundamental question before we do anything else, all right? And that is, where is the price going? We spend days, weeks, months in our quest to find the perfect entry point, completely missing the fact that actually, with a little bit of sound money management, okay, an average system, all right, can make you money simply by answering that question. Where is the price going? Now, easier said than done, right? Where is the price going? Like, that's the million-dollar question. Or is it? Well, what I want to do in this webinar is give you a few techniques, and talk to you about the way that I trade and the way that I identify opportunities in the markets I really think are going to help you. So without further ado, let's jump over to the charts, all right, and let's discuss how it is that you can figure out which way price is going. Now, let's just zoom into this chart here, right? Now, this is a daily chart of the Australian dollar. Now, what do you notice, Australian CAD, sorry, Aussie CAD. What do you notice about my chart here? I think the first thing that you should notice is that in terms of indicators, I only have a moving average there, right? Really, I've only got the moving average, and that's just really to give me a bit of context around price. It's not to tell me what to do or when to do it. It's just to give me a bit of context, just that so when I'm looking at a glance, I can kind of understand a little bit about the markets. Now, what you also see on my charts are trend lines and support and resistance lines. This is a 4-hour chart that you're looking at here. Let me zoom out. Let's go to a daily chart for a moment, okay? And I want you to understand a little bit, let's move that up a bit, about the way that I trade. So what I'm ultimately trying to do is identify key levels, okay, that I think the market will gravitate towards or get rejected from. All right, so my whole, and obviously I'll go into more detail, but my whole trading system is based on this, okay? I have, when I was looking at this trade here in the Australian dollar, Canadian dollar, zoom out and go back here. I saw that there is a big support level here, okay? And my question and my answer is thus. When the market gets to this level, if it holds above this level, then I need to be long. I need to be looking for buying opportunities. If it's below this level, I want to be short and looking for selling opportunities. That's overly simplistic, but that ultimately at the core is the question that I'm trying to answer, is what am I going to do at this level? And that is the answer. If I hold above this level, okay, I want to be long. And if I'm below that level, I want to be short. All right. So what do I look for? Well, going down to a shorter term time frame now. So I trade mainly off of these charts here. So the 4-hour time frame, I'm just trying to get my direction. All right. I'm trying to figure out which way is the market most likely to go. And once I've done that, all right, then I'll drill down to something like the 15-minute charts. All right, or the 1-hour chart, and I'll look for my opportunities to get in the market. So looking at this chart, one of the things I love to trade is a rejection to a level. I love to see the market come through a level and then fail to kind of break any lower, which would have been my signal to go short. But it hasn't managed to do that. So with that in mind, what I'm able to then do is concoct another strategy. So what I can then say is, well, if the market, all right, breaks up above this level and holds above this level, it's not just like break there and you're in, but breaks and holds above this level, then I want to be looking for a long opportunity, okay? So I start to define some parameters, some criteria as to why I want to be involved in the trade. And the first one, as I said, is to say, well, looking at the market here, that red line is a significant level of previous support, okay, which looks to be a little bit of resistance there, but actually it looks like it's held up as being long-term support. Now, when the market breaks through that level, by understanding the way that price should react to a level, it gives you an indication of how you can make money from your trading. Now, if the market held beneath this level, so for example, I like to see a retest of levels, all right, when we get a big break. So when the market broke down here, seeing the market come back up here was a good opportunity for me to start looking for the short. What I would have done here is I would have said, well, if the market has come back up to this level, it's printed at a little bit of a loss, but a bit of consolidation. Now I'm in a position where if the market breaks up above, I can be long. And if it breaks down below, I can be short. I'm at a pivotal level in the market. And I've answered the question, which way is price going? I've said to myself, well, if price holds below this level, then the market is going short. I want to be looking for selling opportunities. If the market doesn't hold below this level, if it breaks back above, then the market is long. I want to be looking for buying opportunities. Okay, and as it so happens, you can see with a simple break of a resistance line. You'd be in there on the break. Okay. Your stop would be beneath this low here. Okay. And then you're starting to look to make money, and almost on that candle there within 15 minutes, you're already, hugely in the money. Then you decide for yourselves whether or not you want to be out at that point. Okay, or whether you want to hold it for a little bit more profit. Obviously, that's your prerogative. Now, does it just work when you approach the level for the first time? Absolutely not. So what do we get here? Well, the market comes back down to this level again on the 15-minute chart. Okay, and use your favorite entry pattern that you want. But let's just assess this a minute. So the market's come back to your breakout level, right? So now you've got a few levels that you can play with, and you can say that ultimately, if the market stays above this red level, okay, you still want to be long. So you're looking for opportunities, and trading off a previous support is an opportunity. The market comes down to this level. Let's start to read the candle for a minute. It breaks beneath this level, okay? So at one point it's a very, very bearish candle, and then it closes all the way back up. And then the next level, the market is showing you its hand. Look at it. A very, very bullish candle there. Breaks out above, and that's your entry to go in. You place your stop below, and, again, within a few hours, you have made money. And this happens again and again and again. The market comes back to it. This time it breaks up. It falls down a little bit, so you probably would have lost a bit of money there. But again, what are we seeing? Well, the same pattern as before. So we're still saying that while the market is above that red level, we want to be looking for opportunities to buy. And again, we get a nice little bit of consolidation around this area here. Okay, the market's moving sideways. It tried to break beneath the red level. It got rejected. Okay, why is it important that we get a rejection beneath that level? The reason that it's important is that when the market does break a big level, if the big players want the price to continue, that's an opportune moment for them to get involved, for all of the trend traders to get involved and start selling the markets, right? However, thinking about all of the stop orders beneath this level, if the market doesn't go lower at that particular moment in time, all right, and instead you get a massive bullish candle like you do here, that's all of the big players sucking up all of the orders in the market, consuming all of those orders, okay, in order to take the market higher. It's something that we've coined, we've termed as being a liquidity fade. So it's where you say that you get people hunting your stops. Well, no one's hunting your stops, but there are big players that hunt each other's stops in the markets, right? And they do that because they want to get a good price for their entry. If they try and enter up here, the market might be up here already by the time they get their entry, because there's no liquidity there. Whereas if they can force the market to come down to this level, where they feel that there's going to be a lot of stop orders, okay, so people that were long above here, when it breaks beneath there are going to be a lot of stop loss orders. And in order to get out of a buy, what do you have to do? You have to sell the market, right? So when the market breaks beneath that level, okay, if you have big players sat beneath the level, ready to consume all of those stop orders, okay, that's quite an indication of the direction that they want to go in, because they could just as easily jump on the bandwagon here and sell it down and see the market go lower. But no, they believe that the market needs to go higher for a reason, and who are we to argue with them? So what we do is, once we see this at this level, again, we say, where is the price going? Where is it going? Well, at this point in time, the market is moving to the upside. It's above this red level here. We've got all of these buyers that have come into the market. They've shown us their hand. They've shown us that they want to be long. So we need to start looking for buying opportunities. The market breaks out above that level, stop beneath here. If you're looking for one-to-one, you get it very, very quickly. If you're looking a little bit more, then a few hours later, you get that too. Okay, what happens here? The market again comes back to that previous breakout level. This stuff plays out all over the market, all over the markets. Okay, on every chart you can think of. We've already decided that above this red level is bullish. We think that the price is going to go up as long as it's above that level. And then what you do is you just wait for the market to, or for the price, okay, to get attracted to your desired entry level, whatever that may be, okay? And then you simply get involved and you start buying the markets. And people will say, well, how could you get involved here? Well, read the markets, okay? Where is price going? Well, first of all, our first clue is that the market is above, or price is above this red line. It's above this breakout level. We have a massively bearish candle. Look at this, selling off. All of this sell-off down here. Another sell-off. And it keeps going, and it keeps going. But look at the bodies of the candles. So it goes from being very aggressive from the selling side to, well, the markets, they don't really want to go any lower. Now the sellers are getting involved. We're seeing buyers get involved. We get a battle here, okay? You get a battle there. And then again, you get a battle. The sellers try and push it lower. The buyers try and push it higher. Okay, it ends up at the kind of at the bottom of the candle. So where do we get involved? Well, here's a good indication. We get a massively bullish candle here above the red level, which is telling us that price wants to move to the upside. Very, very simple question, very simple answer. And we get this bullish candle here. Notice that I don't have like, you know, a super complicated entry system. That's not what this is about. Okay, it's about figuring out which way is price clearing and then finding any excuse to be involved in the market. Obviously within reason, it needs to be logical, but just looking at price action. That gets you into the market. Look, you're in there. All right, and what happens? The market roars off, pays your profit. You would have just stopped down here. If you want one-to-one, you're probably looking at somewhere around here. If you want a little bit more, again, a few hours later, it pays you. And this happens all over the charts. With my morning majors, it's a video that I put up on YouTube quite regularly, right? Where I talk about the trades that I'm looking to take with the major currency pairs. I follow this theme exactly. Okay, up until recently, I said that, well, if the market, when the market approaches this level, if it can hold above this level here, and let me zoom in for you so you can see. All right, simple support and resistance level. I saw the market went up to that level and it got rejected. So then I put in a resistance level there. I said next time the market gets up to that level, it needs to do one of two things. If it breaks out above the level, I'm going to be long. I'm looking for buying opportunities. If it holds beneath the level, I'm short. I'm looking for selling opportunities. Then the market comes down to this level here and gets rejected again. So I put in a level of support. And I say to myself again, well, the next time the market gets to this level, opportunity to trade, okay, not rocket science, and I'm going to have a good idea on the outcome because I'm going to look at price at that level. And if price holds above the level, as in it doesn't break beneath this level and stay beneath this level, then buying opportunities are the ones that are going to pay you. What happens? The market comes back down to this level, quite aggressively sells into it, and then look at this massive bullish candle there. Look at how bullish that candle is. And this isn't just anywhere on the charts. I'm not talking about, oh, trade any bullish candle that you can see. That's not what I'm saying here. I'm saying do it within reason. Think about the overall picture that you're looking at when you're looking to take this trade, right? So you see that the market comes down to this level, breaks out above the doesn't break beneath the level, then we get a massive bullish candle. You get involved here, okay? So you buy over here. Your stop is beneath the low, and then you can see that the market just trades on up and would have paid you very, very quickly, one-to-one very quickly, a little bit more than one-to-one. A few more hours, but you would have been in there. Now the market gets back to that previous level of resistance. Okay, how do we get involved here? Well, the candlestick patterns aren't quite as telling here. All right, so what I would probably do there is put in a level of support and say, well, you know what? If the market can break that level, I'm going to be short. The market breaks that level, you'll stop above the high, and look at what happens. The market pays you. All right, now the market's come back to that level again. What are we going to do here? Well, we're going to wait to see if the market breaks this level. If it breaks beneath this level, then where is the price going? It's going to the downside. How do we know that? Looking at the support and resistance levels, looking at the key levels in the markets, and then engaging your brain just a little bit. And that puts you in the right place to be able to make money in the long run. It's as simple as that. Easy peasy, lemon squeezy. Like I said, when you first start out trading, when you first come to the markets, you're basically trying to answer that question: where is the price going? Okay, I know I keep repeating it, but I want you to get it into your minds. Okay, really etch it into your memory. Where is the price going? You answer that question and you make money. The entries come after. Okay, your perfect entry can come after that. But right now what you need to do is figure out which direction is the price going to move in. And it works all over the charts. Here's another example, okay, on the New Zealand dollar. And if you don't believe me, go and watch my YouTube channel, my YouTube video from this Monday. Okay, you don't believe me, watch the YouTube video from this Monday, and I talk about exactly this. Okay, I call this trade right here. I say the market has rejected this previous level of support that you can see there. Okay, it's broken beneath it. It had the opportunity to go short. It didn't do that. It broke out back above. It then pulled back to this level. And what did I say? I said we need to be long. Why? Because we're above a key level. We want to be long above a level, short below a level. What happens? The market trades on up and pays you money. Now, does it happen like this every time? Of course not. Okay, I'm wrong on some of the trades that I call, but I'm right on a hell of a lot more than I'm wrong. Okay, more of them. Okay, with sound money management, a good risk reward, you make money. It's as simple as that. You will make money trading in this way. Now, who has some questions for me? Anyone, any questions? Did you understand what we were talking about here? Does it make sense? Does it sound like something that you're going to be able to go away and implement in the markets? Yeah, excellent. This is a very, very straightforward approach to trading. It's a very profitable approach to trading. And it's a very, simple way of looking at the markets, the way that you started off looking at the markets and the way that you should look at the markets. Support and resistance levels, a couple of trend lines, and a moving average. That's all you need to be successful. That's all you need. With that information, you can be successful again and again and again. And like I said, you can use trend lines for this as well. It doesn't just have to be support and resistance levels. We can go back over the chart here where I ask myself the same question. Which way is price going? The answer, well, as long as it's beneath this trend line here, I want to be short. Now, here's a little secret. Do you need to be short right on that level? No. You don't need to be short directly on that level. You could say, well, I want to be short beneath this level, but maybe you missed that initial entry. So how do you get involved in the markets again? Well, you drop down to a lower time frame. Okay, we see the reaction to the market here. We missed that opportunity. How do you get involved? Well, you know that while it's beneath that level, you're looking for selling opportunities. How about a few simple trend line breaks? Something like that. Or something like that. And you make money. You follow it all the way down. The key to trading successfully is developing a price buyer. So the price is going to go and then trading according to that plan. If you can do that, you will be successful. This is probably the most important webinar you will ever watch. Even if you don't understand it right now, I promise you in years to come, you will understand it. So do yourself a favor. It's never worse than it is today. Tomorrow is always going to be more. Is always going to be more difficult than tomorrow. It's the easiest it's ever going to be. Okay. So start doing the right things immediately, and I promise you, in the long run, you will thank me. Okay. So if there are no other questions here, what we can do is, I guess we can wrap it up. I hope you all enjoyed this webinar. I hope you all got some good information out of it. As always, I want to thank FX Street for putting on these webinars. You have no idea how valuable they are. You know, bringing all of the experts to the table to teach you how to make money from the markets, to teach you to trade. You know, so thank you so much, FX Street, for putting on this webinar. Thank you everybody else for attending. The next time we do a webinar, I think it's next month, please come armed with your questions. Ask me any question you like. I'm happy to help. I'm happy to answer your questions. Have a fantastic day in the markets. Have a fantastic week. And I hope this information here helped you all. Take care now, and I'll speak to you all soon.